Hey, okay, good afternoon, you beautiful human beings, guys. It is Tuesday. It is the 4th of May. We're almost halfway through this year. It's May, June? Oh, March just started. It's June. It's June. We're almost halfway through this year, and it is good to be live back with you guys. So we will be updating the schedule for the shows, going over the balance of the month. We want to get this week started with pretty much everything you need to know. And there's a lot busy happening around the world, right? There's a lot happening in the markets, a lot happening politically on a local front, internationally. And we thought we were going to put together something just to get everybody up to speed. And obviously, we're going to dive into some markets, some data, some things that we're looking at, and some amazing news and just stuff that's going to be happening, released to you guys over the next week or so. So just let us know where in the world you are joining us from. It's super great to be live with every single one of you. If you haven't done so already, like, subscribe. It's free. For those of you who get our public posts or public live sessions, that's free for you guys. Some of the other stuff will be part of Premium Plus only, just so we can dive a little bit deeper into actual live trading with our clients from around the world. So let's jump into it. Let's get started, right? So from a fundamental data perspective, we don't have too much happening this week. It's a fairly calm week. However, it is NFP week, right? So we have non-farm payrolls, the US employment data that's being released on Friday. That'll be at about 2:30 GMT plus 2. So that generally tends to rock the markets. And I'm going to speak a little bit more about this just in the general direction of where the US is going, where the dollar is going. We're going to dive in some dollar analysis, some past analysis on CPI, and how this all ties in together. Just a further outlook on some of the things we're looking at in the markets across the board. So pay attention to that. Friday, we won't be trading the NFP live. However, we have identified some pretty amazing strategies that we're going to be releasing to you guys pretty soon. And one of it is to allow that US volatility just to move past, right? A lot of people are trading the data as it comes out. And as you guys have seen over the past couple of months, and this is really, it pivots from year to year, the data is sometimes really disconnected from what is actually happening in the economy. And you guys have seen this happen from time to time. However, we do look at the overall look. We really just have a bigger understanding and idea of where the dollar is heading. It generally guides some of our biases on our trade. So we will dive a little bit deeper into that. But there's a few key topics I really want to talk about this afternoon. And as many of you guys have known over the past year or two, we've always had Trump kind of dancing on the screen every time we trade live and we take some profit. It's always good. Now, he is potentially going to be officially back, right? We're going to talk about that in a second. There's not too much happening in the world outside of just general politics. There's obviously quite a big talking point at the moment with regards to AI, right? And that's a combination of AI advancements, companies that are investing in AI, as well as the next big I think evolution is the supply of all the hardware that's going to go to power a lot of these items, right? There was a previous article that mentioned that Musk is in discussion with NVIDIA to purchase out some of their massive AI GPUs, up to 300,000 of them, to essentially power and compete with OpenAI, Musk's own version of OpenAI. For those of you who don't know, Musk was actually an early founder in ChatGPT, OpenAI, the parent company of ChatGPT, and he pulled out because of philosophical differences over where they wanted to take the company. ChatGPT was always meant to be open source, free to the public. Then they moved to a profit model, which he backed out of, right? So Musk is very heavily involved in trying to build out a competitor. We see this happening with Google. We see this happening, obviously, Microsoft, sort of tampering with their own things there. And then obviously Musk launching a counter to really build that item to market. Now, most of you will be familiar with ChatGPT, amazing tool, but there's a lot of competition, not only happening in that race, but in sort of building the infrastructure to empower the next gen features and softwares that we're seeing out there. So chip makers like NVIDIA are obviously going to have a massive role in that. The production or producing some of that raw equipment. So definitely a stock worth looking at and paying a bit of attention to. NVIDIA is obviously just smashing it day by day. But the person we want to really speak about is Trump, right? There's, this guy is like a cockroach. Doesn't matter what happens, he keeps coming back. And for better or for worse, right? Under Trump's reign, the US economy had some of the most prosperous years. Right now, that could have just been due to a bubble. It may be due to, just his agenda, political agenda. But he's pretty much up for a really, really tough season. Right, over and above jumping back on TikTok, which he said he would never do. It seems like he's going to have a stage with Elon Musk to speak on X, the village courtyard, and to really get into some really deeper things. But over and above that, the more serious thing is he's facing some really difficult sentencing hearings and potentially even jail time, which he said he's not scared of. He's, if he has to sit behind bars, he's going to do it. But over and above that, he's also raised about $200 million to try and fund his campaign. So Trump is making waves. Whether you want to see him back in politics, yes or no, it's completely up to you. Love to hear your guys' thoughts and opinions about that. But it was definitely entertaining trading in the time of Trump, right? For those of you who remember, we used to look at his tweets and look at market volatility when he says some stupid stuff, right? Because he does. The stuff that comes out of the guy's mouth is mostly stupid. Some of the stuff makes sense, but mostly stupid. So Trump is obviously going to play a big role. It's going to feather US politics quite a bit. It's going to cause quite a bit of instability as it gets closer and closer to the point where these left and right decisions are meant to be made. And I think this is a precursor to what we're going to be speaking about next, and that is a little bit more on the local front. Now, generally speaking, I don't speak about politics. I don't care too much for it, but in this particular case, it's going to affect every single one of us directly. So, as you guys all know, we've just been through election season. That's happened. It's done. It's dusted. Depending on how closely you've been following it, I'll really wrap it up in the space of 2 minutes. ANC lost a massive majority, majorities in most regions, but they really had a very big setback, right? Overall, they have about 40% of the votes across the country. Now, the big issue here, right, is that we've got new parties, MK, most notably having a very big debut in their first election run. But more importantly than from a markets perspective, the only reason we're speaking about this from a markets perspective is that when we look at financial markets, overseas markets, right? We're looking at the policies of the types of parties and the political parties that are involved. Now, if you understand where the ANC's standpoint is in terms of, some of their policies and what they're trying to achieve, and then you have a look at some of the items from like the EFF and some of the other parties with regards to nationalization and all these other items, this causes obviously quite a bit of turmoil from an international relations, investor relations standpoint. No one's going to be investing in a country that potentially wants to nationalize all of the major assets. So that's the one side of things. The other side, and I think this is going to be the story that really evolves over the coming weeks, is that because the ANC has not secured that majority vote, they're now pushed into a very tricky position where they kind of need to decide, are they going to go into a coalition with a smaller party to obviously keep keep rule over South Africa. Now, they obviously faced a bunch of choices, whether it's DA, whether it's EFF, and all these other things, but everyone's got their demands. Everyone's got policies that are a conflict between these two parties. So basically where we're heading at the moment is that investors are very much looking at this whole thing play out. And this will, in my personal opinion, again, everything we say and do here is for educational purposes only. But in my personal opinion, I think this is going to cause quite a bit of instability. I think there's going to be quite a bit of fear surrounding the Rand. And I think we're going to see the Rand really just take the hit for all of this uncertainty. As investors look into this, they want to see this play out. They may be pulling their funds in a safety measure to obviously allow these things to play out. So I think this is going to be an evolving story. We're obviously going to see it evolve. We're going to be paying a little bit more attention to USD over the coming weeks because I think there is going to be some big opportunities there. But this is something that, whether you're just looking at a local perspective, you're just dealing in the Rand, or whether you are dealing in the dollar, the pound, the euro, or you've got any sort of trade relationships, this is obviously going to have a big ripple effect. Now, obviously, we're all praying that there's no violence, there's nothing, untoward that sort of pops out as a result of, these issues. And so all we can do is just pray and hope these guys keep their heads level as best we can, or as best they can, and just hope that this all sort of blows over as much as possible. So moving on to something a little bit lighter, and obviously I'd love to know your opinion about this coalition story and what do you think is going to come of it. And I hope you participated in the elections to obviously give your 2 cents, right? So something else that's a little bit lighter hearted, which I think is, I think it's, it brings the reality of, how important a role traders play in this particular space. And that is, if you guys remember 2 or 3 years ago, we had that whole GameStop, we had that whole, meme trading thing that was kind of really just blowing up all over the place. And for those of you who aren't part of Reddit, I'll share with you guys the link if you want to go directly to the source of what I'm going to be speaking about right now. But in essence, a quick summary, what ended up happening is a guy by the name of Roaring Kitty, otherwise also known as Deep Effing Value. He did an analysis on a company called GameStop that he saw was quite heavily shorted by a lot of hedge funds in the US, and saw that the company's underlying values, their books, their forecast, where they were going was positive, yet they were just being squeezed. Their price was being squeezed. Basically, what happened is hedge funds were taking a bunch of those shares and selling it, shorting those shares, squeezing that company down to zero, right? Now, a lot of companies do this, a lot of hedge funds do this, and sometimes they even do it publicly. They will often, and this is important for this next part, they'll often say, our outlook on Microsoft is negative, and thus we are shorting it, whatever the case may be, but they create that public perception that the stock is bad and it's going to decline. Right. Remember, this is obviously quite important. Now, what happened is, they call themselves by a bunch of different names, mostly derogatory, but basically these are average people jumping into stocks the first time, following some sort of data lead, wherever it may come. And you can have a different opinion about this, but it's quite erratic, right? People just get into a bunch of things. They yellow it, they hold it, diamond hands it, whatever the case may be, until the end. Now, this individual that I was speaking about a little bit earlier, Roaring Kitty, he essentially did this analysis. Hey guys, listen, there's a short squeeze here. If we get together, we can essentially push the price up. Now, if they push the price up on a short squeeze, what it means is those funds that were shorting that price, they would in essence have to buy a bigger position. So they'd have to buy that company's stock, right, in order to then further short. And the higher the price goes, the more they need to buy. And their buying activity attributes and affects that positive share price. So it becomes this whole snowstorm, right? Or whatever storm you want to call. And that's what happened about 3 years ago. GameStop prices rose, people dropped out, people held. There was a lot of money made. In essence, this guy made plus minus about 40-50 million off of that move, and a bunch of other people. A lot of people lost money. It's important to note. A lot of people lost money getting in too late, getting in on the hype. That all went away. Now, since then, he was essentially sued by the SEC. There was fines he needed to pay for quote-unquote market manipulation. But the important thing to note here is that Robinhood, who the platform, the essential broker who these trades were running through, they froze the trades, not allowing clients to buy positions, but only to sell or get out of positions. This caused a whole storm, right? How could they do this? And there's been a lot of explanation since, but apparently, they had, margin that they needed to maintain, and that margin is being called by the people passing on their trades. Now, there's been a bunch of developments since then showing, that they were just passing on the trades. They weren't acting as a broker, and there's a whole bunch of other things you can dive deep into. But essentially, they halted trading. Everyone was furious. Nobody could buy into the trade. They could only sell. And it just caused a bunch of chaos. There's a bunch of Senate hearings around this. He sat in Senate. He got grilled for this. And that's basically where it ended. This is about 3 years ago, right? Now, about 2 or 3 weeks ago, he reappeared for the first time ever on Reddit and basically just created a new account. Same link, same username. And just based on that alone, GameStop shares and AMC, which is the listed theater company, they both jumped just on his reappearance, right? Now, on Friday night or Saturday night, I'm not 100% sure, it's US date, our date, Roaring Kitty, otherwise known as Deep Effing Value, posted a screenshot, right? Which is what I'm going to show you guys right now, which just triggered a whole storm, right? And he just posted a screenshot saying that he has a $115 million long position on GME, right? Which caused the markets to absolutely lose their minds. So now this was after market hours. He posted after market hours, and the whole crew of these super stonk gangs, Reddit traders, just lost their mind. Everyone started buying, everyone started doing a bunch of things. And then again yesterday, it came out that apparently they're going to ban him for insider trading or market manipulation. And there was even an article that came out that said Goldman Sachs, who's one of the liquidity providers for this E-Trade type of setup, said they're going to ban him and remove him completely. Now, whether that's all, talk, we don't necessarily know, but it is a powerful discussion in this meme trading generation that we're in. And even if you look at retail trading, yes, the fundamentals are different, but it shows the power of people getting together and making a decision on what they can do to markets. And ultimately, what is resulting in this is everything is being pushed skew. Algorithms for the big banks, for the hedge funds, are being pushed awry because the volumes that are coming in are outside of what they're normally looking at. It's causing chaos. Now, for the hedge funds that were involved about 3 years ago when this original short squeeze happened, they lost billions. There was even a few of them that actually closed their doors because they never in their lives thought that retail traders could get together and essentially make a move this big. So it's a big one. The story's evolving. I'm going to be sharing this link with you guys on Telegram. If you're a Premium Plus client, I'll obviously chat with you guys directly on Telegram. I'll be sharing that link with you on Telegram. In addition to that, I'm also going to be sharing with you guys a really great tool, a financial market news tool, which is on Telegram as well. And all it is breaking news. So when a breaking news item happens, it's a simple description, a picture, and a summary, done, dusted, end of story. But it happens live. So a lot of this news came out there before it was even publicized. And if you notice, when we flicked through the news, there is no mention of any of this on the news, right? They're trying not to cover it. They don't want it to blow up. They don't want it to get bigger than what it already is, but it is worthwhile following. They call themselves degenerate traders, right? So that sort of self-description should say enough on its own. So that is obviously something that's in development. I'll share with you guys the links. You can follow along this with us. And it's just good to watch. Now, again, I don't condone any sort of meme trading or any sort of one view, one size shoe fits all. Everybody should do their own due diligence. Markets are extremely risky, and you need to obviously do what works for you and never just follow a general consensus or analysis, right? So that's obviously a little bit of a lighter story. I get quite a kick out of reading this and just what the guys are up to. As of a few hours ago, his current position in terms of value is well over $210 million, right? So he's absolutely just on another level. It's going to be something bigger. It's going to blow up. It's going to continue to develop. We will continue covering it as we go. However, we're not here for just news, right? This is all great. This is brilliant. But what does it mean for markets? What does it mean for us? So there's a few things I really want to talk about quickly before we actually get into the charts. First thing first, right? We have uploaded a brand new trading journal for every single one of you. So you can go onto school, onto DVDM markets, even on the free platform, go under classroom, and then you'll scroll down, you'll see your trading journal, right? You can download the trading journal. It's a really simple tool to use, but I promise you, and I can't stress this enough, if you follow the trading journal and you actually are diligent to complete it, it will change your trading game. It'll give you options to reflect, insights into why you took a trade. Was it a signal? Was it your own analysis? What were the terms? What were the conditions? Were they met before you took that trade? Then every week you can go back and say, oh, that was a bad signal, or that was a bad analysis, that was a bad trade, right? And allow you to grow as a trader. So I'd really, really recommend you guys get your hands on that. Now, in addition to that, we have something very, very special launching. I'm trying to get it done this week, but we are launching for the first time this year. We're launching our brand new golden nugget strategy. Now, there's a few new faces that you guys will see popping up around DVD markets over the coming days and weeks. But in essence, we have a whole new team that's looking at strategy and strategy alone, right? I know I've had a ton of requests from you guys to revise the golden nugget strategy, to provide those step-by-step entry exit rules day by day on different assets. We've got a monster project underway that is basically complete. We're reviewing the data. We've gone through a ton of data to put it together, and that brand new golden nugget strategy will be available to you as Premium Plus clients. I'm aiming for the end of the week. I'll actually commit to that. Before the end of the week, we'll have a step-by-step golden nugget trading strategy. Now, this will include all the steps as well as me taking you through it in a one-on-one session, how to execute it. That's backed with days and months of data that you can see every single day what happened, what would you have needed to do with exact rules. So not vague, not maybe buy, not maybe sell. If this and this and this equals that, then this is what we do. These are the results. If you followed it every single day, this is what would have happened. So that's all going to be wrapped up for you. That's going to be a huge present. You guys are going to love it. It's going to be an absolute game changer across the board. Now, let's jump into what we really are here to do today, right? Let's speak about the markets really quickly. So you guys will notice we're making a slight transition over from MT4, right? We're going to be eventually launching MT5 with through TDM, hopefully in the space of this week to clients. But for the new season, we're going to be doing a lot of our analysis through TradingView, right? There's going to be a lot of perks here. We're going to be able to share our charts with you and be able to share our analysis with you, to comment, to make feedback. all these kind of things. And a lot of the new team that's coming into DVDM markets is really going to be focused around making sure this works for you guys, that when we're doing an analysis, when we post a chart, you'll be able to see it on TradingView, edit, provide your comments, give back to us. We'll be able to really just have an amazing way of communicating on the same thing day by day, right? So we're going to dive deeper into that. Now, I really want to talk about the US dollar first and foremost, because I think it sets the stage for some of the rest of the assets that we need to speak about. So I'm going to do a little bit of a deeper dive on the US dollar. And I just want to point out really quickly, this is a 4-hour, maybe just to zoom out there, that the US dollar has really been for basically the first half of this year, all of 2024 really, the US dollar has been in this massive bull trajectory. Now, we've been in a super clean, super neat channel, right? Been in a super neat bull channel here, and we really started to make this exit really in the course of last week, right? So we tested support here. A lot of our trades were really looking at, and you guys will see we had one of the really bad days was a Thursday, and we really were looking for long positions as the dollar index really respects some of these previous supports that it's been withholding over months, right? Now, we saw the US dollar for the first time last week really start to make that attempt to get down here. We saw that first touch 28th of May, and then we really came down literally on Friday, and then we made that little bit of a push through yesterday. Right. Now, this is important for a couple of reasons. The first reason being, this is the first time we're seeing a break of structure, BOS, on the dollar index in 6 months. It's obviously significant. Now, we have a very key level running across the dollar index, and it's at a 104.29, so 104.30 plus minus. And what we're looking at is, does the dollar index respect this level? Do we make a retest along any of these levels here? And what do we do there on after? Now, the reason this is quite important, as you guys know, as we've had the previous discussions on interest rates, on announcements, on inflation, if we look at where the US dollar is busy heading from an inflation perspective, right? If we go back and have a look at last inflation CPI data that we previously got, right? That's over here behind me. That was on the 15th of May. The last CPI reading was the first one in a while that we actually see that inflation is starting to come under control, right? If we have a look here, CPI inflation rates month on month, it's starting to come down from that 0.4%. Straight CPI also coming down. If you have a look at CPI rates month on month, right? This is not core CPI, just pure CPI. That actually came down below what economists were thinking. So if we pair that up with a potential weakening of the labor market, the US labor market on Friday, if we see a non-farm payroll that underperforms or undershoots some of the values that economists are expecting, at the moment, economists are expecting new jobs to be created, unemployment rates to remain flat, average hourly earnings to tick up 0.1%, and pretty much everything there on after just to tick up slightly but remain flat. If the labor market undershoots on this value, we've already seen that some of the retail sales data is coming under expectation, right? So we have a cooling US economy from just a retail spending perspective. We have a cooling of that CPI rate. And if we have a cooling of the labor market, this really forces the Fed's hand into really starting to give a hint to calm markets down that there will be a interest rate reduction. And that is what is the dollar's thrived on. Right, the higher than expected interest rates for longer is what the dollar's really thrived on. So looking at all these things coming into perfect alignment, it's not, crazy to start seeing a little bit of a break in dollar structure, but this will really start to give us some really long-term plays. Now, it doesn't mean necessarily that if the dollar breaks structure here, that we're just going to see a straight fall. We've seen in the past, any time a structure is broken, we can retest, and we can retest multiple times higher. Right, so it's really important for us to really start seeing some basic price action happening here. We want to see those lower lows, lower highs outside of this breakout point on the dollar index. So we do have a longer term, at least for the month of June, we have a little bit of a longer term outlook for a bit of a weaker dollar. Okay, there we go. Sorry guys, appreciate it. The studio sort of layout has moved. I can't really access the cameras anymore. Smash had to jump out and run around and assist us there. Okay, so again, for the month of June, we are expecting that bit of a weaker dollar, and it starts to help with some of our other forecasts as we look deeper into time. Now we'll dive into the deeper dollar issue a little bit later. I'm going to focus this afternoon on 3 indices. We're going to focus on German 30, also German 40, depending which index you look at, Dow Jones, US 30, US 100, which is also the USA 100. And we're going to look at gold really quickly, right? Now, quickly looking at German 30. German 30, for those of you who've traded with me personally or speak to me on a daily basis about the markets, you'll know that I spend a lot of time on German 30 just to look at the general state and health of a market, right? This is a 4-hour time frame. And also want to just point out here that we have got a pretty big spike through, but for the general purposes, this is the trend on a 4-hour time frame. Now, German 30 has come very beautifully and just come and tapped on that support level and started to retrace up a little bit. Now, for me, and one of the beautiful things about TradingView is I can simply create an alert that once German 30 crosses this level, it'll send off an alert, it'll send off some emails. And I'm really watching this level on German 30 because what I generally see is that when German 30 breaks structure, it will then generally follow on, especially if it's clean, pure price action, we'll see a knock-on effect on some of the other indices, right? So I just want you to keep in mind that's 4-hour time frame, German 30 tapped onto support, but obviously not yet through, and we're obviously just keeping an eye on that. Now, looking at that with a similar view or similar lens on, we can see that US 30, yesterday we caught a really good sell on US 30. I didn't post an update yesterday evening, but that was on Monday. We caught a nice little sell there on US 30. I believe we banked around about 2% if you're a copy trade client. So it was a nice little trade for yesterday, and it really evolves into our evening strategy, which we will be divulging a little bit later as well. When are the most profitable times to trade? How to avoid volatility, it'll all be part of it. But what we're seeing on US 30 is a very similar type of trade setup here, is we've got a little bit of a poke through right from April, but generally speaking, we're sitting pretty flat on support here. Now, US 30 obviously has had a big tumble, right? Around the middle of May, we start to see that big sell-off on US 30. It caught us out one of the days on a Thursday, where it pretty much came and activated most of our buy levels that we were anticipating for long positions. And now what we're trying to figure out and really monitor is that will US 30, make a low here, and will we still respect this level? Because obviously we're looking for some longer term runs. Now, if German 30 breaks that support that I was speaking about a little bit earlier, that may be a precursor to start looking at some of the other indices also breaking some market structure. So we're obviously very keenly looking at German 30 or German 40, and obviously keeping a close eye on US 30. Moving on to NASDAQ, we have a very similar type of setup on NASDAQ. NASDAQ has had a pretty neat channel. We had a very excited market towards the middle of May. NASDAQ overextended out of its normal moving range towards the latter half of May, or at least the second half of May. And we've really come down to a known area of support, right? This whole area on NASDAQ, that 18,400 from a dead center perspective, and you can sort of add 200 pips on either side. That is a really hard support for NASDAQ. Now, at the moment, we obviously have a market that has pressed deep into that level. It's made a recovery. It's come and made that deeper retest, and we're kind of sitting on support. So a very similar look, whether you're looking at US 30, whether you're looking at NASDAQ, whether you're looking at German 30, everything has kind of come to support. Now, the difficulty when we have multiple markets sitting at a point of support, this is where it becomes very difficult from a trading perspective, and it's very difficult from an analysis perspective, is in most cases, no one's expecting that support to break, right? So in most cases, when markets return to a buy zone, the clear tested route, if you look at the past couple of months, if it enters that buy zone, it buys, there's your stop loss, let's go. The difficulty is when we break a support, we have a change of structure, a very big change of overall market structure. And that means at that point of breaking a key level, you're either going to hit a few stop losses, so your buy outlooks will be obviously null and void, because obviously you're breaking through support will become sells. And that is where, from a trading perspective, I always get a little bit more cautious at key levels, rather wanting those levels to reveal themselves as true support, or allow that support to be tested and broken to avoid any sort of losses, to avoid selling one moment, or buying one moment, getting stopped out, selling, and then having a retest that maybe goes back into support level. So it's quite a tricky thing to navigate. However, if you are a Premium Plus Signals client, you don't have to worry too much. We're pretty much going to be sending that straight through to you, so you can pretty much execute. I did get a request from somebody the other day asking about, can we potentially send out an alert before we send our trades? And we are looking at implementing a system like that with a team, where at the point we're about to issue a trade, we'll send out alert on the corresponding route. So if it's a Forex trade, it's an indice, a commodity, we'll send out an alert saying a trade will be issued within the next 3 minutes. As the team prepares the trade, does the orders, does the levels, checks, so that you can be alerted and just know a trade is coming through if you don't want to miss a signal, right? So that is something that is obviously coming through pretty shortly. Okay, so that being noted on the dollar index, we don't have enough time to talk about Bitcoin this afternoon, but I think very well worth noting. Bitcoin is pretty much back at that $70,000 a coin. It's an all-time high, but you'll notice news outlets aren't really speaking about it. They don't really want people to be speaking about and talking about this inverted commas fake currency that isn't going to go anywhere, because it's currently now worth $70,000 a coin. So if you have one Bitcoin, I mean, it's 1 point whatever million rand in a single digital asset. So we'll obviously cover that in a separate session. But I think the important thing to note as we wrap up here for gold is gold has pretty much been a little bit sideways. And I'd say pretty much from mid-April, we've had some nice little pushes to take out some previous highs, but obviously didn't make any substantial gains over those highs. So a real big pullback back into known levels for gold. And I really think, that's going to be a key level we have to monitor in the future. If we see this play out, we obviously want to see gold, at least break that $2,400 to an ounce before we can really start getting serious about any long-term moves. But the zone I really wanted to point out and just make sure we're all on the same page about is the fact that this whole zone here, we've seen in the past when gold's in its massive bull run in April, we made some really good wicks or liquidity tests into this area that kind of gave us the full range of support here for gold. We see later on in time when price fell below that zone eventually and tried to make a press up, gives us a very firm structure for that support. Currently support once was resistance, and then the same thing when we kind of made a retest here. So we've got a very nice band on gold that it's really going to struggle in and within, right? So what we're obviously looking for is, we are aware, right, that the dollar index, as I pointed out a little bit earlier, the dollar index is in a pretty weak state. However, a retest is likely, so we might see some dollar strength intraday over today, tomorrow, but ultimately we're really looking at what does that dollar materialize. And I think the key point to take away here is that Friday will reveal, specifically with that labor non-farm payrolls data, that should give us that final indication. Does the dollar come back into structure? Was this just a bear trap, or do we see a significantly weaker dollar here and a potential for a new low? If that is the case, we obviously have a pretty good case for any sort of long-term positions on something like gold, right? Gold is, it's ranged enough for the bull run that it's had. It's had an outstanding run, February, March, April, massive bull run. Gold literally went from $1,900 to an ounce to $2,400 to an ounce of gold. So that's like a 20% run just on gold in the space of 2 months. So it's corrected, it's had its time off, it's put its feet up. This is obviously the next key zone we are obviously looking at. There'll be a bunch of diagonals here, a bunch of pivot points we can also work on, but really I'm looking at weaker dollar, stronger commodity prices, stronger gold prices. I'm really looking at this zone here for any sort of longs that could potentially take out that $2,400 to an ounce. So that's kind of where we are sitting. We obviously have some very interesting things you guys will be seeing as part of the dollar domination and part of the golden nugget strategy. And I've revealed this as a secret in the past to some of you guys in the group, was for that 9 o'clock candle to look at that reversal, right? So you'll see today, this morning, exactly 8:15, which is 9 a.m. GMT +2 on your TD Markets accounts. That 9 a.m. candle, which is 8 o'clock, we see that big reversal from gold. And if you guys caught that as a pure sell-off, you would be very much smiling right now. Gold has fallen basically about 200 pips in that space of time. So if you're not yet a part of the golden nugget strategy, if you're not yet aware of these specific moves that happen every single day, before the end of the week when we release that to you, you are going to be one happy trader. I can absolutely guarantee it. And furthermore, if you are a Premium Plus client and you don't fully understand the golden nugget strategy, we will do a personalized one-on-one with you to make sure you understand how to enter, when to enter. We'll even give you some assignments on some blank sheets with some market data that you can fill that in, give it back to us, and we can then give you that tick to say, listen, you've got everything you need, you're good to go, you're good to trade that. It's liquid money, guys. It's just waiting in the markets for you every single day. Now, we don't send out the golden nugget strategy yet. We don't trade the London hours from a signals perspective, but from next week, that is what's going to be happening. So we're going to be tackling the markets. And I just want to mention this really quickly. I know it's been a long show. We're going to be tackling the markets in the mornings. So we're going to tackle London session. We're going to smash that 8, 9, 10 o'clock. There's a few different strategies that pivot around those 3 hourly order blocks or kill zones, if you will. We're going to tackle that. We're going to smash that. We're going to be done with that, and then we're going to be refocusing on the markets after the US Open, right? We're finding a lot of volatility in the US Open that is unnecessary. We're finding a lot of clean market structures that happen, even as late as 4, 5, 6, 7, 8, 9 o'clock. These are some of the biggest trades that happen in the day, and you can go and have a look at that for yourself on indices. You'll see that's where the big rallies happen. Those are the big sell-offs happen. So we're going to be adjusting a little bit slightly, but we will be communicating that with you. If you are Premium Plus clients and you are getting our signals, which have been a cracker, I think we closed about 4,000 pips for last month, even with some really difficult trading days. Still, if you follow the strategy, if you follow the system, if you follow the rules, still 4,500 pips of profit, I think, plus minus somewhere in that lane. So we're going to adjust our trading time slightly. We will communicate that with you so you know exactly when we're going to be trading, when to look out for a signal, and how to most capitalize on that for your own trading. So a bunch of things discussed, a bunch more things going to be happening and launching soon, but that is kind of where we want to park it at for today. I know it's been a little bit longer than just 10 or 15 minutes, but I believe these are the things you need to know in the markets. I'm going to be sending links, some of the things I've discussed in the Premium Plus groups. If you're not yet a Premium Plus client, it's a no-brainer, $59 a whole month. It's less than $2 a day to receive education, to receive signals, to receive insight, direct communication from me, be access to copy trade, all the amazing things we do. It's an absolute no-brainer. Closest people to doing what we do, and even then they're not even close, is $300, $400 a month. So you're saving a ton of money and you have an opportunity to really grow and learn in this space. So no-brainer, link down below, get yourself sorted out. As I said a little bit earlier, if you aren't already subscribed, hit the subscribe button, hit the like, that's free. Whenever we have a public broadcast, you will be notified and you'll be invited. So outside of that, guys, we're going to dive into the markets and we're going to be sending out trades shortly. I can see a few trade setups. If I look up, there's just different screens everywhere. So if I look up, I'm not daydreaming. There's just some things I'm looking at. So we will be sending out some trades pretty shortly. Markets looking ready to make some moves. So we appreciate you. We love you as always. Be safe, trade safe, and until I see you guys a little bit later. Goodbye.